Welcome back. Today, we are conducting a professional deep dive into the fourth quarter 2025 financial performance of the Goldman Sachs Group, Inc. We will analyze the firm's trading revenue, investment banking momentum, and overall capital strength. Before we break down the charts, please like this video and subscribe to our channel for more institutional grade financial insights. Let's begin. We begin with the current market standing of the Goldman Sachs Group, Inc., trading under the ticker GS on the New York Stock Exchange. As of the latest update, Goldman Sachs' stock was priced at $845.99, showing a massive increase of 4.75%. While the post-market data shows a slight retracement of 0.23%, the overall sentiment remains overwhelmingly bullish. Goldman Sachs is a global titan in investment banking, securities, and investment management, and this significant price jump reflects strong institutional demand and market confidence in the firm's strategic direction. The company has navigated a shifting global economy throughout 2025, and this valuation highlights its leadership position in the financial sector. This baseline pricing provides the foundation for our deep dive into the firm's profitability, balance sheet stability, and segment performance. Throughout this video, we will dissect the technical data to provide a comprehensive view of Goldman's financial health at the close of 2025 and what investors should expect heading into the next fiscal year. Turning to the income statement for the fourth quarter of 2025, Goldman Sachs generated total revenue of $31.32 billion. While this is a slight 2.62% decrease from the previous quarter, net income remained robust at $4.62 billion. The chart illustrates that while top-line revenue has seen some quarterly fluctuations, the firm's operating income of $5.95 billion and pre-tax income of $5.86 billion remain incredibly consistent. This data demonstrates Goldman's disciplined approach to cost management and its ability to maintain high margins even as market conditions evolve. For investors, the stability in net income, which has steadily risen from $1.8 billion in early 2024 to the current $4.62 billion, is a powerful indicator of operational efficiency and strategic growth. Observing these quarterly trends helps us understand how Goldman Sachs balances its high volatility trading revenue with more stable fee-based income to ensure a resilient profit base across various business cycles. The firm's ability to generate nearly $5 billion in quarterly profit underscores its dominant earning power in the global capital markets. The balance sheet provides a snapshot of Goldman Sachs' immense financial scale. As of the fourth quarter of 2025, total assets reached a staggering $1.81 trillion, maintaining its position as one of the most significant financial institutions in the world. Concurrently, total liabilities stood at $1.68 trillion. This growth in the balance sheet reflects the firm's expanding activities in global markets and its increasing role in providing liquidity to the world's largest corporations. Most importantly, the firm's equity position remains solid, providing a vital buffer against market stress. The ratio of assets to liabilities is a key indicator of the firm's leverage and capital adequacy. Despite the trillion-dollar scale, Goldman Sachs maintains a conservative risk profile, which is essential for meeting regulatory requirements and ensuring stability during periods of high market volatility. For long-term investors, the focus remains on how efficiently the bank is deploying this massive asset base to generate superior returns for shareholders while maintaining the necessary capital ratios to navigate complex global regulatory environments. This balance sheet strength is the bedrock upon which Goldman builds its market-leading franchises. Cash flow analysis is essential for understanding the liquidity dynamics of a major global investment bank. In Q4 2025, cash from operating activities showed an outflow of $13.42 billion, a figure that is common for institutional banks as they rotate large portfolios and adjust their trading positions at year-end. This was accompanied by an outflow of $7.89 billion in investing activities. However, financing activities saw a significant net inflow of $16.75 billion, largely due to capital markets activities and changes in the firm's debt structure. For the full year 2025, Goldman Sachs generated a total operating cash flow of $25.22 billion, with annual free cash flow reaching $23.15 billion. These robust annual figures underscore the firm's exceptional ability to generate actual cash from its diverse operations over the long term, providing the necessary liquidity to fund its dividend, engage in share buybacks, and reinvest in its technological infrastructure. While quarterly cash cycles can be volatile due to the nature of investment banking, the strong annual performance confirms that Goldman's core business remains a highly efficient cash-generating machine. Key efficiency ratios offer further insights into Goldman Sachs' operational performance and its valuation relative to its peers. The price-to-earnings ratio is currently 17.13, and the price-to-cash flow ratio stands at 10.91. These ratios suggest a valuation that is well supported by the firm's current earnings power and cash generation. Looking at the quarterly trend through 2024 and 2025, we see that Goldman has maintained a consistent valuation multiple, reflecting the market's appreciation for its market-leading positions in M&A advisory and fixed income trading. These metrics are vital standard tools for comparing Goldman against its global competitors. The stability of these ratios through recent quarters suggests that the market has a clear and consistent view of Goldman's value proposition as a premier global financial institution. For an analyst, these numbers represent a company that is well positioned to capitalize on increasing capital markets activity, provided it can maintain its historical margins and continue its trajectory of efficient resource management across its global operations. These ratios confirm that Goldman is trading at a level consistent with its status as an industry leader. For income-focused investors, Goldman Sachs' dividend policy remains a highlight of its capital return strategy. The firm recently paid a quarterly dividend of $4.50 per share, which results in a trailing 12-month dividend yield of 1.74%. The chart shows a significant upward trajectory in dividends per share over the past few years, reflecting management's commitment to returning capital to shareholders as the firm's profitability has scaled. While a yield of 1.74% is slightly lower than some traditional consumer banks, it is accompanied by a much higher rate of dividend growth and the firm's aggressive share buyback program. Investors should note the last ex-dividend date of March 2nd, 2026. The consistent growth in payouts, even through various economic cycles, reflects management's confidence in the long-term stability of Goldman's earnings and its ability to generate high returns on equity. This combination of a growing dividend and a strong market position makes Goldman Sachs a core holding for institutional portfolios focused on total return, especially given the multi-billion-dollar cash flow support we analyzed in the previous segments. Reviewing the latest financial highlights, Goldman Sachs reported an earnings per share of $14.01 for the last quarter, significantly beating the analyst estimate of $11.70 by a massive 19.79%. Revenue for the same period was $13.45 billion, though slightly below the estimated $14.52 billion. Looking ahead to the first quarter of 2026, analysts are projecting a further increase in earnings to $16.04 per share, with expected revenue rising to $16.72 billion. The significant beat in EPS this quarter is a powerful signal of the firm's exceptional operational leverage and its ability to squeeze high profits from its core advisory and trading desks even when revenue faces temporary headwinds. While the forward-looking guidance is ambitious, Goldman's history of consistent outperformance, with technical beats reaching nearly 20%, provides a very positive backdrop for investors. Monitoring these reporting cycles is essential for understanding how the market's high expectations are being met by the firm's actual bottom-line performance. These numbers demonstrate that Goldman remains the most profitable firm on Wall Street. The revenue trend analysis over the past several quarters reveals a story of consistent performance and frequent market surprises. While quarterly reported revenue has fluctuated between $12 billion and $15 billion, the more important metric is the firm's ability to consistently beat analyst estimates. In 2024, we saw surprises as high as 12.23%, and in early 2025, beats of nearly 10% were common. While the most recent quarter showed a negative revenue surprise of 7.34%, it was offset by the record-breaking EPS beat we analyzed earlier. This suggests that the quality of Goldman's revenue remains incredibly high, with superior margins protecting the bottom line. The projections through 2026 show a continued expectation of high revenue, with quarterly targets rising toward 16.7 billion. For any investor, this pattern of growth combined with the firm's historical ability to overdeliver on profitability is a strong indicator of a company with a dominant market position. These trends provide a solid foundation for future stock performance, even as the global financial landscape continues to shift. Finally, we analyze Goldman Sachs' revenue by business segment. The Global Banking and Markets division remains the firm's undisputed powerhouse, generating $41.45 billion last year, a significant increase from $34.94 billion the year before. The Asset and Wealth Management segment also showed strong performance, while other specialized divisions like Platform Solutions continued to scale. Geographically, the Americas remain the dominant market, accounting for $36.55 billion in revenue. This shift towards global banking and markets dominance is a critical strategic move as it aligns the firm with the high growth areas of capital markets and institutional trading. The diversified revenue streams across segments and regions provide Goldman with a balanced growth profile, reducing its dependence on any single financial product. This strategic positioning is what allows the firm to maintain its market leadership and generate superior returns even when specific sectors face temporary slowdowns. Understanding this segment breakdown is key to assessing Goldman's overall value and its ability to continue leading the global financial industry into 2026 and beyond. That concludes our professional financial report on the Goldman Sachs Group for the fourth quarter of 2025. From the $1.8 trillion balance sheet to the massive EPS beats, the data reveals a firm that is operating at the pinnacle of the financial world. If you found this technical analysis helpful, please hit the like button and share your thoughts on Goldman's future in the comments below. Don't forget to subscribe for more professional institutional reports. Thanks for watching, and we'll see you in the next analysis.